Welcome everyone to Vested Interest. This is Shane back again for another Stock Pick of the Day video. It is March 11th. Today we're going to take a look at one out of the consumer discretionary sector, Wingstop. You may have visited them. You know, if you have a Super Bowl party or a party of any kind in general, they provide wings and other food and refreshments. Now, if you are new to the channel or you just have not done so, if you could hit that thumbs up button down below if you find any value in the content, hit the subscribe button, join us on this journey to financial freedom, join the vested interest community. Hopefully you're on your own journey to financial freedom already, and hit that notification bell so you're notified whenever we put out any new content. Doing that really does help a small YouTube channel like me grow. I only grow with your help and with your support, and dropping a comment down below or sharing with anyone you think might find value in the content also helps as well. So really appreciate all of you out there who have done that, and a special thank you to those who subscribe to the channel. Now, this is the vested interest stock screener. This is how I look at a company on a high level. It is also how I set up these videos. So we're going to walk through this criteria together. You can pause this and go through it, and I don't just blindly copy my criteria. Make sure you're setting your own criteria based on your investing strategy, your timeline for retirement, your age, and your goals overall. Now back to Wingstop. Check them out at www.wingstop.com if you want to know more about the company or to order some wings. That's their homepage where I pulled this information from. About us, what began as a small buffalo-style chicken wing restaurant in Garland, Texas, continues to soar to great heights. Today, there are more than 2,000 restaurants open across the globe. Wingstop quickly became a fan favorite when we first opened our doors in 1994. Our proprietary recipes, outstanding food, and superior customer service created a demand that could only be satisfied by more locations. And in 1997, we began offering franchises. Today, we are one of the fastest growing companies in the country, attracting top entrepreneurs and operators with the drive and passion to own their own business. Some highlights here. They said over 2,000. Looks like they've got 2,214 at least as of March 11 locations. 20 consecutive years of same-store growth, which is one of the things you want to look at for this type of business. What are their stores growth? You know, if they're just opening new stores and all their growth comes from opening new stores, and you have slowing same-store growth, that is a negative. That is not a good sign, because then they constantly have to be opening new stores. They're not getting increased revenue from the locations they've already opened. 21% system-wide sales growth, adjusted EBITDA up 27%. And 76.5% robust cash conversion. So that must be what I'm not sure exactly what they're meaning here. You, again, check them out at their homepage if you want to know more about this. But it looks like they're 76.5, or if that is what that means, the profits that they're taking in. So the rest must be paying for, you know, the building, the location. But I'd have to look more into that. I'm not sure exactly what they're trying to tell me here. Robust cash conversion. Drop in the comment section if anyone understands what that means. Again, www.wingstop.com. I'm going to have to look into that and see what they're talking about here. Now, the reason we were taking a look at them, down 5.58% on the day. You can see that big drop, and then it was just a little bit drop. They tried to recover a little bit around 10, and then the rest of the day it was much more of the same. Closed out the day at $334.22. We are talking about Wingstop Inc., ticker WING. Pretty easy to remember, Wing. And 52-week range as low as $150.08, as high as $375.32. Definitely closer to their 52-week high than their 52-week low, and that is a huge spread. They've really run up this year. I don't think that's all from the Super Bowl either. Average volume, 431,000. Today was 957. A lot of selling, right? That's a lot of selling pressure right there. Market cap of $9.805 billion, a beta of 1.66. So pretty volatile today, and overall more volatile than the overall market. PE ratio extremely high, 142.83. They would need to be growing extremely fast to justify such a high price to earnings ratio. Earnings per share, EPS, $2.34 per share. Earnings date, somewhere between May 1st and May 6th, so coming up here in the next couple months. Forward dividend yield, forward dividend and forward dividend yield. 88 cents is their forward dividend. I believe they're a quarterly payer. Yield is very, very low on this one, 0.25%. So you're looking for more growth than you are dividend payout or dividend yield on this one. Extremely, extremely low dividend yield. Ex-dividend date, March 7th, so that was last week. You would not be in line for the next dividend if you were to buy them now. And their one-year target, at least according to Yahoo Finance, where I pulled this information from, $321.06. So they see some more downside on this one. Now let's get into the statistics a little bit. We're going to look at dividend yield theory. Now, for this, what we're doing is we're looking at the 5-year dividend yield average, 0.43%. We're comparing it to its current, 0.25, or over here where it says forward annual dividend yield, 0.25%, same number. And if this was higher, that would be undervalued. But since it is lower than their 5-year dividend average, it is potentially overvalued, at least according to dividend yield theory. So this one needs to pull back significantly to even be at fair value, let alone give you a margin of safety on this one. Payout ratio is low, 34.89%. I like under 75%, so this is very low compared to what I typically look for. And you know, 75% is just the top end of what I'm looking for, unless it's a REIT, which is a real estate company that's required to pay out more. A limited liability company, some other limited partnerships are required by law to pay out more. But typically, for a company like this, I'm looking for 75% or less. Again, ex-dividend date was March 7th. Looks like they're going to pay out on March 29th. So kudos to you, the holders of this stock already. You should be getting your dividend payout this month yet. Now we're going to get into the financials and look at free cash flow, but there's a lot of other good information under financials. You can look at their balance sheet, their income statement, their debt to equity ratios, are their revenues growing over time? What do their margins look like? Are they paying down debt? A lot of good information under the financials tab you should be looking at to understand how the business makes its money. What does their revenue look like? Is it growing over time? Is it decreasing? A lot of good information there that you should be looking at if you are investing in individual stocks. If you're not interested in doing that, stick to index funds or ETFs. Stay away from individual stocks. You'll get yourself in trouble. For our purposes here, we're going to look at free cash flow. Typically, if you have growing free cash flow, you have growing dividends over time, and that's what we want to see. Going back to 2021, looks like they had 20 million in free cash flow here. 2022, 52 million. 2023, 80 million. So far, we haven't seen the numbers. These are the same numbers for 2023, so they must have just closed out their books for 2023, and we'll have to wait to see what they have in 2024. But overall, from 2021 to the end of 2023, definitely seeing nice, steady free cash flow growth. And it looks like in 2023, they started repurchasing their own shares. You'd want to look and see if this is a one-time deal or if they have a plan to continue this over time, which would be nice. I like whenever a company is repurchasing shares. It means you as a shareholder, as they repurchase the shares, even if you're not buying more stock of that company, you own a little bit more as they pull shares out of the system. So far, pretty good numbers. Low payout ratio. Dividend yield theory says they're potentially overvalued. So really, it would be so far only the stock price is what we're concerned with. It needs to come down a bit. Free cash flow is growing. Repurchasing shares. That's nice to see. Now we're going to jump over to stockanalysis.com. This is another site that I like. You pick any sites that you want. Just make sure you're looking at more than one, not just blindly following one site. So 2, 3 sites to make sure the information you're getting is accurate and up to date. Now, according to the 14 analysts that have taken a look at this, they call it a consensus buy, though it is right on the edge of a buy and a hold. If you were to go to stockanalysis.com, go to the forecast tab, that's where this is at. You'd be able to click and see how many call it a strong sell, a hold, a buy, and a strong buy. Just based on this, I'm assuming that more are calling it a hold and a sell than are calling it a buy or a strong buy based on where it's at. But it is in the buy range for them. For me, it needs more of a pullback. Dividend yield theory says this one's overvalued. I'm going to lean on dividend yield theory myself. A low estimate of $170, that would be a much more attractive entry point. That would be a 49.11% decrease from where it currently sits. Average estimate of $274.64, that would be a 17.79% decrease. And the only way you're really making any money as far as price appreciation on the shares is if it hits their high estimate of $410, which would be a 22.73% increase if you were to buy them now. Now, I like to get into the statistics here, look at financial efficiency. This is how well a company is reinvesting its capital back into itself. Now, return on equity, I usually like 10% or better. This is extremely low, negative 16.7%. That's not good. I'm assuming that's because they are continuing to open locations, and that costs a little bit of money to do that every time they're doing it. Now, the return on invested capital is very high, 32.86%. That's the return on capital once they open those. So I'd like to see this. I don't like to see this. I'd like to see this turn around a bit. I also like 5% or better earnings per share forecasted growth. They're forecasted 19.67%, very high, and revenue forecasted to grow 17.47%, very high as well. Again, very good numbers overall, except for where it currently sits as far as the price. Let's jump over and look at a little bit of dividend history right here. Again, they're a quarterly payer. Payout ratio 37.45%, under the 75% I'm looking for. Very fast dividend growth, 14.86%, and it should be. Very low starting dividend yield. High dividend, even like to see this go up into the 20s or 30%. With such a low payout ratio, I want more, and such a low payout right now, I want more dividend growth than what they're showing here. But they have a lot of room to increase that, and if they were to increase this, at 14% for the next 10 years, it might be all right. May 2021, they were paying 13 shares and some fractions of a penny. 2021 in August, they raised it up to 16 cents and some fractions of a penny. In March 2022, they raised it up to, that must be a special dividend, $4. That's got to be a special dividend. May 19th, 2022, they raised it up to 17 cents. August 11th, 2022, they raised it up to 19 cents. And August 17th, most recent 2023 of August was up to 22 cents. So they are aggressively raising it, a penny, a couple pennies at a time, few pennies at a time. But I would like more of a payout ratio on this one, 1-2%. So definitely looking for a pullback on this one if you're interested. I would not touch this one until it was maybe under 200 per share, 250. Maybe start looking at it. If you like to sell options, cash secured puts to try to get it as low as possible, that might be an idea. If it dropped below $200, $250 again, that's kind of where I would be at with this. I have not done a discount and cash flow analysis on it. If anyone has, drop it down in the comment section below. Let me know what you think. What does that look like? Well, that is really it for this one. As always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, hit that subscribe button. Join us on this journey to financial freedom. Join the vested interest community. I do personally read and respond to the comments. I'm always interested to read your questions, opinions, or suggestions for future topics. So if you have a company you'd like me to cover in the Stock Pick of the Day series, drop it down in the comment section below. I'll try to work into the rotation. I do not cover tobacco stocks, and I don't cover stocks that don't pay dividends. So that's pretty much the criteria you can look at. If it's a dividend paying company, even if it's a small dividend, I'll look for a day it's pulled back and try to work into the rotation. Well, this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by. Hope you have a great week, and we'll see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion and investing journey for educational and entertainment purposes. Investing involves risks. You can't lose money and should never invest any amount not comfortable losing. Always do your own research. Invest based on your situation, circumstances, and select criteria, or seek the advice counsel of a certified financial advisor.